Yeah, you don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. Now I'm sipping on this whiskey, got one chance and it's risky, so you can't play around. And I got my team behind me like a background. I don't never back down, picking up the slack now. Now I'm focused, keep on grinding for my stacks now. I'm feeling lost in this ocean, where's a lighthouse? I keep on swinging for the fence and I ain't strike out. And yeah, that's how I'm feeling, yeah, that's how I'm feeling now. We're not here for a long time, yeah. It's 9 to 5, it's a long grind, yeah. A lot of to success, it's a long climb, yeah. Now I'm sitting here making up for time, yeah. Man, I took so many losses that I lost count. I didn't know what I was made of, but I found out. And this life will blindside, you better look out. These haters wanna see you fall and get you took out, yeah. Cause I fell on my face, and this life is a race. I keep on checking my place. Now I'm riding for my team, you can tell by my plates. And this life just threw a hook, it caught me right in the face. But I'm getting back up, I'll do whatever it takes. I'll climb a couple of mountains, I'll swim a couple of lakes. Don't got time for the bitching, don't got time for complaints. Now you going through some shit, now tell me how does it taste? You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit. What's
going on, everybody? Welcome to Boss Plus Think Tank.
Choices, I just own my mistakes, cause I'm screaming fucking hand down, I ain't searching for breaks. But I'm barely treading water and this life is the lake. Now the pressure keeps on building.
What's going on, everybody? Thanks for joining us today. This is going to be a banger. I'm going to make this quick. I don't have a whole lot of time today, but we're going to get right into it. We're going to talk about banking crisis, which is worse than you guys could imagine. Reverse repurchase program. It's meme stocks and how scared Bloomberg is of those said meme stocks and how they could possibly cause a market collapse. Let's make this real quick. Just get right into it here. Checking out this post here from Finance Lancelot, you can see real quick something that Janet Yellen just said a couple of months ago. They are very concerned. This was March 16th.
Fed board and I, in consultation with the president, determined that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your
we
plan?
made that determination.
Right. So what is your
banks.
plan to keep large depositors from moving their funds out of community banks into the big banks? I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're fully insured no matter what the amount is if you're in a big bank. You're not fully insured if you're in a community bank.
Well,
Oops.
you're not fully insured. And
You were at Signature, and it just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks. And that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system, and we took these actions.
So is there any discussion that that special assessment would only apply to the larger banks, or was it always assumed the special assessment would cover every bank, including rural banks in my state?
just going to have to move on.
If we have a collapse of the banking system and its economic consequences, that will have very severe effects on banks in Oklahoma that will also be threatened.
I'm just worried about the long-term
We are going to have to
consequences
move
on our
on.
banks as well.
They did not like that line of questioning. Did you hear Old Yeller stuttering? She does not know what to say because they are having major crisis with these banking operations. And we're seeing that right here. For those of you guys that are unaware, this is the reverse repurchase program operations from the New York Fed. Today we saw $1,728,322,000,000 from 96 counterparties get basically where banks purchased treasury bills from the overnight treasury bills from the federal government, and the next day the federal government bought them back at a rate of 5% plus another 0.05%. So the federal funds rate plus another 0.05%. This has started to collapse here slowly. It was at a high of around $2.3 trillion. And as you can see here from this chart, this is the 2018 through today. And over the last, as we've been having major issues here over the last 2 years, what you're seeing now here is the beginning of a collapse from around $2.3 trillion down to what we're seeing today of $1.7 trillion. The highest we saw was December 30th, 2022, as the banks were finishing cooking the books at around $2.5 trillion. Now, keep in mind, this is every single day. And this is starting to move downwards, in part because of the increase in yield for treasury bonds. Some of the money market funds and mutual funds, aka shadow banks, have started to move their funds from the overnight RRP, from the overnight reverse repurchase program operations, where they would get 5.05%, to some of the treasury bonds in which they would get more. However, some of these treasury bonds are a month, 3 months, 6 months, or longer, and so on. Sorry, I meant to say, like, depending on the length of them. Some can be up to 30 years. But they're definitely not going to be available, and they're not going to have that money anymore in the shadow banking sector to directly pull from them in case of a liquidity crisis. So what we're seeing here is a reversion to the mean, mainly because the CPI data came down slightly better. But although CPI data came down slightly, it does not mean that inflation is cooling. Simply that inflation in non-housing and non-energy is cooling. As you guys know, CPI might be at 3% or so, but housing is still over 7% inflation rate. Energy is still significantly high. These are very sticky. They are not transitory. And this is going to force the federal government and the Federal Reserve Bank to raise interest rates more than 2 times, unless the system happens to break before them. But as we all know, if you've been watching this channel for an extended period of time, Janet Yellen, who's the head of the plunge protection team, has been using a lot of taxpayer dollars through the use of the Economic Stability Fund, the ESF fund, which is our taxpayer dollars, to prop up the stock market using naked shorts on the volatility index and zero DTE, which stands for zero date to expiry options on the SPY in the VIX itself as well, in order to cause gamma ramps on the SPY in order to keep the market as high as possible for as long as possible. That is why what you're currently seeing on the mainstream media and coming out of the government is that the economy is great, which it's not. Saying that inflation is cooling, which it's not. Which is saying that the banks are stable, which they're not. And they're saying that everything is different this time, which it's not. It's much of the same as we saw in 2008, 2020, 2000, all the way back to the 1930s. Everything that we've seen so far over the last year and a half, 2 years, has been exactly the same or worse than it ever was in every prior market crash. The yield curve has been inverted for over a year at this point, and it's not just a little inversion, it is a massive inversion on the yield curve. And this is signifying that there are some major problems at hand. And any of you who understand what is happening, even slightly, in financial markets should be aware that this bull run that we're currently seeing is not a bull market. It's just a bull run in a bear market. But this fake out, where we're up almost 70% from the lows of 2022, and 2023 here, this fake out that we're currently seeing is not something that's going to be lasting forever. Quantitative easing is over. Quantitative tapering has arrived. The government cannot continue to do QE because inflation is way too high, it's way too sticky, and it's definitely not transitory. Therefore, their only option, on top of all of the money printing that they're already doing for sending money to Ukraine and for this, quote, Build Back Biden, aka Build Back Beijing bill that they've got going on, are not helping the situation, because that is currently inflating the money supply, which is causing inflation. It's really quite simple. And at the same time, we're seeing a decline in M2 money supply. The decline in M2 money supply is showing a liquidity being sucked out of the system by the government. Think of it like a brake torque on your car. You have your foot on the brake and your foot on the gas at the same time, and your rear-wheel drive car is just spinning and burning up those tires. It's only a matter of time before the tires stop smoking and they just pop, and the entire bubble pops. Simple as that. What we're seeing now in financial markets is a big, serious issue. I'm not a financial advisor, and this is not financial advice. Do your own due diligence. Do not do anything simply because I say so. But what we're seeing here is now even mainstream media coming out and saying, often being paid to say by many, meme stocks are back, raising a red flag for the broader market. This article just came out last week. You can see Bloomberg saying that investors are fascinated with meme stocks again as they hunt through lower quality names searching for returns. Notice the way that they lovingly call these stocks meme stocks and lower quality in an effort to get people, to keep people from investing money in them. They say, and in the process, they're raising a red flag for the S&P 500 index. That is definitely a red flag. Why? Because the S&P 500 always does poorly when meme stocks run. If you guys may or may not have known this, but in 2008, on September of 2008, about September 27th, we saw the largest single-day market crash in the S&P 500 history, where the S&P 500 lost almost 14% of its entire value in one day. Almost exactly 30 days later, meme stock darling Volkswagen, which was 55% owned by Volkswagen on 15% short interest, ran from a few dollars a share to $1,000 a share. And the only reason it stopped at $1,000 a share was because the corporation, Porsche, made a deal with the federal government, the hedge funds, and the government of Italy in order to settle for $1,000 a share. They are a corporation. They are not retail shareholders that are willing to hold to the moon. So they're going to take 1,000% profits and call it a day. That was a great investment by Porsche, who now owns Volkswagen as a part of this takeover. Now, what they said here on Bloomberg, when some of the most heavily shorted stocks in the market rally, like meme shares are doing now, and safe havens like consumer staples slump, investors should prepare for a few days of weakness in the broader market, according to BTIG. I don't think that's accurate in the sense that a few days of weakness in the broader market is a tremendous understatement. The beginnings of what we've seen in the meme stock covering over the last week was just the tip of the iceberg. The real meme stock darlings, the real dangers to the market are stocks like AMC. Take a look at what's happening here on AMC. There is not 15% short interest like Volkswagen, but 28% live short interest percentage of the free float estimated by Ortex data. This Ortex data comes directly from the exchanges. But that data that it goes to the exchanges is self-reported by market makers and shorts. So they can choose how much of their data they actually want to report and how much they get to leave unreported. That means the contracts are not reported, swaps and so on are not reported, shorts marked as long are not reported, rehypothecations are not reported, synthetic shares are not reported, naked shorts are not reported, tokenized securities are not reported. You get the gist of this, right? I could just keep naming more and more methods of manipulation. The maximum cost to borrow, as you can see here, is over 1,000% on AMC. The minimum cost to borrow is 931% on AMC. The average is at 955% on AMC for over 28% short interest. This cost to borrow is APR, annual percentage rate. But I don't know about you guys, but I've got a 2.875% mortgage. If my mortgage went from 2.875 to 955, I'd have a big problem. even if it was APR and I had to pay it monthly, I'd have a big fucking problem because my mortgage would be astronomical and I'd be losing millions and millions of dollars every year on a bad short bet in hopes of retail capitulating. But as we know from current lawsuits that are existing in the court systems, retail has not capitulated. There are over 3.8 million retail investors in AMC alone who own over 85% of the float, whereas Volkswagen owned 55%. There is over 28% short interest versus Volkswagen, who had around 15 to 16% short interest. This is absolutely massive. We are seeing problems of astronomical proportions for short hedge funds and family offices. Take a look at what you've got here. AMC is on the threshold securities list. This is the Regsho threshold securities list for 13 days in a row, ladies and gentlemen. In April, the Securities Exchange Commission said that if companies and shorts violate the 13-day Regsho threshold rule, which states that broker-dealers with fail-to-deliver positions for 13 consecutive settlement days must immediately close out the failure to deliver position by purchasing shares in the open market. Today is day number 13, ladies and gentlemen. AMC should have seen buying pressure, but it has not yet. It has not yet, and we're barely on the 13th day. Keep in mind, a lot of the buying pressure that is reported on exchanges is T+2 data. The data doesn't automatically hit when a large institution or a short or a broker-dealer buys shares or sells shares. That data does not hit the NBBO, the National Best Bid and Offer, at the very same moment that it occurs. It is trading day +2. So if today is Monday the 17th, we may not see that occur until the 19th, Wednesday, or maybe even Thursday, depending on if it was done after hours. So failures to deliver, which is, as you can see, I'm showing you here on my Regsho, I have AMC filtered out for the date of the 14th. I cannot filter out the 17th because there is no data whatsoever for the 17th. There's nothing there because that information does not get posted until the end of the day, the following day usually. As of the 14th, we are seeing 13 consecutive days. Today is Monday. This was on Friday. That's why there's a 2-day gap for those people wondering. That being said, failures to deliver are massive. What are the failures to deliver on AMC? Well, my friends, I'm going to show you that right now. The failures to deliver on AMC are not just a few shares. We're looking at 12,988,307 failures to deliver from June 30th. Now, why are we looking at data from June 30th? Because all of the data on the market is greatly manipulated, and they have over 15 days to deliver the data. Okay, so we are now looking at the 30th of June, 2023, failures to deliver. This is aggregate data. That means on the 2nd of June, there was 697,000. The following day, there was a few less. The day after that, there was 1.1 million, 1.6, 1.7, 3.4 million, and so on. So even though some failures to deliver have been closed out, as of June 30th, 2022, we were still looking at 12.9 million. You guys can hear my little one out there. She's angry. She wants me to come out. I'm sorry, baby. I'll be out in just a few minutes. I promise. She's hanging out with mama right now. So dad's going to keep doing this. 12,988,000. Oh, I feel bad. I feel bad listening to her not going out there. But she needs a minute to herself. Fails to deliver occur when one party in a trading contract, whether it be options, futures, or shares, fails to deliver on their obligations. These failures derived due to buyers not having enough money to take delivery and pay for the transaction and settlement. That means market makers can actually fail to deliver and in some cases save money opposed to actually buying the shares on the open market. In the case of sellers, it means that they don't have the goods to meet the transactions. So whether the buyers don't have or want to save a few bucks by not buying back those 13 million fails to deliver, or whether the sellers don't have the shares available because retail owns 85% of the float across 3.8 million shareholders and they're not fucking selling. If you take a look at the on-balance volume, which remains extremely elevated, shows that the majority of people are still holding those shares. But the last time AMC made it on the threshold securities list, it was there for almost an entire month. But now we're looking at 13 consecutive days. However, We have not seen the closing out occur. It is supposed to occur, but it has not occurred. What does that mean to me? It means that there are much more serious issues going on with this stock in a way that is really bad for short hedge funds, banks, prime brokers, clearing houses. And I'm okay with that because as retail investors, we didn't cause the problem. We're not the cause of the problem. We're the solution. Because if buying and holding a stock breaks the system, then the system was already fucking broken. Take a look at the Stanford Institute for Economic Policy Research. They stated that they've run the analysis, the same stress test that was run by the federal government just a couple months ago. And they said that their new analysis finds that opposed to the federal government's $500 billion in losses to prime brokerages, aka big banks, there are over $2.2 trillion, $2.2 billion in estimated losses. And these losses and nervous customers could spark even further bank runs during a stressful situation, such as market collapse, more banks going out of business, customers taking their money out of big banks, liquidity situations, war with countries around the world, nuclear issues. The list goes on. Short covering. The list goes on. Commercial real estate collapse due to Evergrande or Shimao or Sunac or any of these other major real estate companies that have trillions of dollars and hundreds of billions of dollars worth of bonds around the world. Because your bank, my bank, our banks all hold those commercial paper notes. And when those banks actually go bankrupt, when those real estate companies, commercial real estate companies like Evergrande actually go bankrupt, then those notes that are currently holding their 100% margin value will be completely devalued. And all of that collateral will be completely worthless. So those $800 billion worth of commercial paper that was issued by Evergrande will become from $800 billion as it is today, even though the company has lost the majority of its value, the moment that they're declared bankrupt or insolvent or get taken become a private company owned by the CCP as opposed to a privately owned retail company. All of that will become worthless. We've already also seen big banks like Silicon Valley and Silvergate and many, many others have these same problems. That is exactly what Janet Yellen was talking about here. She is absolutely sure that banks will not be completely covered.
Board and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is
And
your
we
plan?
made that determination.
Right. So
these
what is
two
your
banks.
plan to keep
She
large
doesn't have a plan.
depositors from moving their funds out of community banks into the big banks? I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're
it's-
fully insured no matter what the amount is. If you're in a big bank, you're not fully insured if you're in a community bank.
Well, you're not fully insured.
Ladies and gentlemen, this is why we say, fuck is the banks. I left all my banks that dealt in ISDA contracts and moved my money to credit unions, and I feel much, much safer. I have multiple credit unions, each with $250,000 in FDIC insurance per account, and I feel much safer that way opposed to being stuck with JP Morgan Chase or B of A or BMO Harris. Because even if they're big banks, even if they're covered by the FDIC, they still deal in ISDA contracts. And those ISDA contracts are in the hundreds of trillions of fucking dollars at this point. Tens of trillions to hundreds of trillions of dollars exist in the derivatives market, more than many, many times the entire world's GDP combined. I know it's an unfathomable number, but these are the facts. Look up the global derivatives markets, and it will astonish you. Your jaw will drop and you will realize we are in a house of cards. The fiat is a joke. Bloomberg is concerned that AMC shareholders will make too much money and the danger that it spreads to these over-leveraged hedge funds. AMC short interest exceeds 28%, and there's over 3.8 million shareholders, like I said. Ladies and gentlemen, I've said it before, I'll say it again. We're going to be so fucking rich. Shorts eventually have to cover, and they have to close positions. It doesn't matter to me how long I have to wait. As long as AMC can maintain solvency and everything goes well with the reverse split and the conversion, and AMC issues new shares on the open market. Well, the last time I saw in January and June of 2021 when AMC issued shares on the open market, well, the stock price went from a few pennies to $12 a share in January of 21. And then in June of 21, the stock price went from about $11 a share to $79 a share in intraday trading. And those contracts that I was purchasing, those AMC call contracts that I was purchasing for $19 to $22 a piece, well, they became worth between $6,300 and $6,900 per contract. Wow. Pretty entertaining, isn't it? That, my friends, is why I think we're going to be so fucking rich. But again, I'm not a financial advisor. This is not financial advice. This is not a solicitation for you to buy, hold, or sell any securities. Do your own fucking due diligence. Do your own homework. Take the information I've given you as simply information and go verify it and go look at it for yourself. Because that's all this is. AMC is currently, and now as of July 17th, being sued by another shareholder. His name is Kevin Barnes. He claims that AMC is overdue in holding its annual meeting, and they are trying to force AMC to hold their annual meeting by August 18th. But you want to know why this doesn't really mean anything to me? Well, ladies and gentlemen, because AMC can hold that annual meeting at any time. AMC can turn around tomorrow and say, hey, we're going to have an annual meeting next week, or in 2 weeks, or in 3 weeks, and still get it done by August 18th. So I really don't see this being an issue, even though Kevin Barnes, who's trying to continue the delay and stall tactic by these short hedge funds, is attempting to open this lawsuit. It doesn't really matter to me because anybody can sue anybody for anything, and that doesn't mean that they're actually going to win the case. So I see absolutely no value in that lawsuit, and I do believe that AMC is going to proceed with the APE to AMC conversion soon because Chancellor Zern in the Chancellery Court of Delaware has a much lighter schedule this week. She doesn't have anything scheduled for this Friday of this week, and that leads me to believe that that gives her an entire day to further deliberate and possibly even submit her written statement and decision on the APE to AMC conversion reverse split settlement, and that would allow AMC to move forward with all of those things and then issue shares just like they have in the past. That being said, ladies and gentlemen, you heard my statement on it. Do your own homework and your own due diligence. But I did want to bring this to your attention. I have been permanently banned on Twitter. If you guys are looking for @BossBlunts1 on Twitter, you will notice that I am no longer there because I have been perma-banned. Because the DOJ Civil Rights Division, @CivilRights on Twitter, posted that a former Virginia police officer has pleaded guilty to civil rights offense for sexually assaulting a minor victim, aka raping a child. So this piece of shit police officer raped a child. And in the reply, I said, hang him. Hang him. I was replying to the DOJ to push for corporal punishment, to hang the motherfucker or electrocute him in a chair or pump his veins full of drugs and kill him because he killed this child's life when he chose to rape him or her. I don't know. God bless this poor child. Completely traumatized for the rest of their lives. But Twitter, being the left-wing, ridiculous, woke pieces of shit that they are, have permabanned me for saying this. Ladies and gentlemen, I don't know the last time you checked, but corporal punishment is legal in the United States, and it is legal in many countries around the world. So asking the DOJ to push for corporal punishment in terms of hanging a fucking pedophile rapist, I think is well within my rights as an American and well within my rights of free speech, even on the woke fucking Twitter. But, you know, Elon's Twitter is more of the same. It is not shown to be any different of what it previously was. So at Boss Blunts 1 is no more. You can find me at our company Twitter at Lit Exchange LLC. So do me a favor, ladies and gentlemen, if you want to see me come back and be able to reach out to 250,000 people per post or more every time that I tweet to share information about our government, economy, banks, politics, macro, stocks, tag at Twitter support and tell them to reinstate Boss Blunts 1. That will allow us to reach millions of people per day, hundreds of millions of people per month with the information that we provide. As opposed to on at Lit Exchange LLC, you should go follow me there if you'd like to see more of my tweets, because I am going to continue tweeting from there, whether or not they reinstate my account. I doubt that they're going to reinstate our account at Boss Blunts 1 because Twitter is a bunch of woke assholes who would rather protect the rights of a child rapist pedophile than protect our free speech. Ladies and gentlemen, fuck Twitter. Go on it and tell them that you want Twitter support to reinstate Boss Blunts. Tag at Twitter, tag at Twitter support, tag Elon Musk, and tag at Boss Blunts 1. Make sure that you're careful to tag the correct one because you'll have to manually type it in, Boss Blunts and the number 1, because if you don't, if you auto-select one that pops up, it will pull up one of the many spam accounts that is have been trying to impersonate me for many, many months and years at this point. So I would appreciate it if you gain anything from my videos, if you could please do that on Twitter for me. I have never asked you for a dime. However, I do appreciate Patrick Stimson. Thank you very much for that super chat, my friend. He says, fuck Twitter. Your info is appreciated as always. Thanks for your super chat, my friend. I have never asked you for a dime. I've never asked you for anything for myself in any way whatsoever. I am now asking you. I have given and given and given for over 2 years on this YouTube channel, Twitter, Instagram, TikTok, etc., and LinkedIn. And now I am asking you for once to go on Twitter and ask them reinstate Boss Blunts 1, because the way that and the reason for their permanent suspension is absolute bullshit. Fuck Twitter. Do me a solid, everybody, and go check that out. Send them a tweet. And then at the same time, make sure you follow at Lit Exchange LLC. It's right on the screen right now. There's no E at the beginning of Lit Exchange LLC. All right, ladies and gentlemen, I appreciate your support. I appreciate your time. If you appreciate the information that I've given you, feel free to drop a follow, drop a subscribe, share the video, because as you know here on YouTube, as on Twitter, we're getting shadow banned by these woke pieces of shit all around the world. Thank you, everybody. I wish you peace and wealth. Have a great rest of your day. I will leave you with a beautiful little song that one of my friends made. His name is Zabi, and it goes a little something like this. We're going to be so motherfucking rich. We're going to be so goddamn rich.
I think it's time to blow this thing.
Make sure you're properly hedged.
Okay, 3, 2, 1, let's go.
Act accordingly. We're going to be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
yelling, cowboy, give me the fucking money. Get the goddamn money printer out.
fucking rich. Get the goddamn money printer out.